You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 12th day of January, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is reserved for members only and those who are taking their 1-week free trial. If you've not yet taken your 1-week free trial, in a few minutes, Michael will come on. He will show you exactly how to do it. There's no credit card required. And for 5 consecutive trading days, we're going to treat you just like you were a lifetime member. We invest our time, energy, and resources in you so that you can make a well-informed and intelligent decision as to whether or not you really want to trade for a living, and if you're willing to invest in yourself. Now, the second broadcast of the day is open to the public. That's everybody everywhere on planet Earth with an internet connection. Whether it's your phone, your tablet, your PC, your Mac, doesn't matter. There's 2 distinctly different ways to join the afternoon broadcast. I'm going to give you the first one, or the best one, first. Go to mytradingiq.com. You only have to do this once. Scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and then every trading day going forward, whether you become a member or not, you'll get an email about 1 hour before the afternoon broadcast starts. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, I call that the better way because it gives you access to the question box, so you can actually ask questions and be a part of the discussion. The second way to join the afternoon broadcast is to simply point your browser to youtube.com/CFRN. In fact, if you've logged in during the first method I just explained, and the audio drops on our platform, as it has done now for a few weeks, and we're working to fix it, and now first we have to figure out what the problem is before we can fix it. But anyway, if during this broadcast your audio drops, just point your browser to youtube.com/CFRN. The audio will be pristine, and you'll pick up right where you left off. Okay? Now, not only do we broadcast live every afternoon on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,100 daily live broadcasts archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's the best way to get to know who we are. You go to the YouTube channel, youtube.com/CFRN. At the top of the page, there's a couple of tabs. Click the one that says Live. It will then display for you in chronological order every daily live broadcast. In fact, I think we're probably approaching 2,200 at this point. I'll check the numbers later and update it accordingly. YouTube.com/CFRN. Now, for those people new to the world of CFRN, you may have heard this week what we say, what we do, who we say we are, maybe even why we do it. But what were we saying 6 weeks ago, 6 months ago, a year ago, 2 years ago, even more? I encourage new people to scroll back as far as you want, pick days at random, and you don't have to listen to the whole broadcast, but at least fast forward to the part where Michael's doing the recap of the live training room, and then fast forward to the part where I'm doing the recap of the Logic 247 alerts and the concierge trade alerts and the big picture talk. And what you'll find is over these 2,100 plus daily live broadcasts, there's a thread of continuity, a thread of connectivity woven through each and every daily broadcast. So we're not just who we say we are today. We're the same people we were 6 months ago, a year ago, 2 years ago, going really all the way back to when we first launched CFRN in 2005. So with that said, let's open with a word of prayer as we do. Now, we spent over a week talking about what the Bible says about money. Last couple days we started a new topic. It's called Pass It On. Pass what on? The good news. Our scripture today is 2 Timothy chapter 4 verses 3 through 5. And I'll read from the Message translation. You're going to find that there will be times when people have no stomach for solid teaching, but will fill you up on spiritual junk food, catchy opinions that tickle their fancy. They'll turn their backs on truth and chase mirages. But you keep your eye on what you're doing, accept the hard times along with the good, keep the message alive, do a thorough job as God's servant. Now, let's be honest. Doing the right thing isn't always the easy thing. In fact, the right thing is rarely the easy thing. Every day you are faced with situations that demand a choice. For example, will you speak well of a coworker or classmate when others gossip to appear funny or cool? When given an opportunity to cheat on a task at your work or a test in school, do you choose, rather than to cheat and take the easy way, do you simply choose to do the work yourself? Or when someone asks you to do something you know isn't the best decision, do you stand your ground? If doing the right thing under pressure is a struggle for you, the good news is you're not alone. In the Bible, there was a young leader in the church named Timothy. He faced lots of difficult choices and needed a reminder that he wasn't alone when things got hard. Just like Timothy, when we face opposition for doing what's right, we don't have to be afraid. We can lean on God and others we trust for strength. When we do, we have an opportunity to be a living example of God's character to everyone around us. This is such a practical way to pass on the good news, not by what you say, but by how you live your life, by being an example. Join me in a word of prayer. Heavenly Father, we thank you for your many blessings, for your mercy, and for your grace. We know that we are recipients of your great love and the good news of your gospel and our salvation. Enlighten the eyes of our heart that we may see, that we may know what is the hope to which you have called us, the hope of eternal life. May our hearts burn with the words of the Great Commission, so that we make disciples of all nations. We pray that you open doors in all areas which our lives intersect. May you pave the way for the conversations we will have. We pray that you would open doors in our workplaces, school, our leisure activities, and in our relationships. Lord, we pray that you would make us aware of opportunities to bear witness to the greatness, to the glory, and the goodness of you, our Savior. Give us a boldness to walk through these doors and proclaim the hope of redemption in Christ and the promise of eternal life, for the glory of your name and for our good. Lord, we ask these things by the blood of your Son. It's in Jesus' name that we believe and pray. And everybody said, Amen. Let me give you the numbers from around the world. These are, or we'll start with, the cash markets, or the indices, as they're called. We had some pretty volatile action this morning off the CPI month-over-month number, which was a miss from what analysts expected. But the markets seem to have recovered from that sharp sell-off, and now the Dow, the cash index, is up 239 points. The NASDAQ is up 40. The S&P 500 is up 15, and the Russell 2000 is up 16. Now for the Russell 2000, our man in the street, that's a gain of almost 1%. In the Asian markets, in the commodity basket, crude oil up $1.45, trading 78.86 last. That's a gain of almost 2%. Gold up $16.70, trading 18.9560 last. That's a gain of almost 1%. I'm sorry, guys, I got to put you on hold for just a second.
Okay. Well, I can just take it over from here. Right. Here we go. Today. Here we go. All right. Okay. So Dwayne was pretty close to finishing up. So I'll just take over doing what I normally do because I know this is probably an important phone call that he's got to take right now. All right. This is a 5-minute. Let's flip this back down to a 7-tick range, and we'll get into everything that we did this morning. Okay. Let's see here. What did I want to bring up? This one? Hang on a second. Hang on a second, guys. I'm trying to find the right one. Here it is. This is the right one. All right, so here we go. Today is Thursday, the 12th day of January, 2023. Now, if you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com. On this page, all you have to do is click right here where it says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. Just sign up for it right there, okay? And yeah, that's all you have to do there. Once you do that, if you sign up for the trading platform, if you sign up for the trial, you should definitely download the trading platform, okay? Go here and download whatever trading platform you use. Again, I'm going to say this, I say this every day, but I'm going to say this. If you spend more than 5 minutes setting up your trading platform, then get in touch with us, okay? You can email us at support@mytradingiq.com, support@cfrn.net, or you can call us at 949-423-EMINI. 949-42-EMINI. So if this takes you more than 5 minutes, do not let this be a stumbling block. If it takes you more than 5 minutes to set up your trading platform, get in touch with us because I can do it in 5 minutes for you. Okay? All right. So we get into what we did today. Now we had a little bit better day than yesterday. Fewer trades, but still a better day. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 12th day of January 2023. We lost 5 ticks in crude and made 22 ticks in gold and 27 ticks on the ES. That put us at 507.50 on the morning session. Today took 1 minute and 1 trade to get to the goal for the day. That one was up $100 a contract, and I took a total of only 8 trades this morning. All right, so on the month now we're at $4,012.50. That's over 8 trading days, averaging $501 per contract per 2-hour trading day. Down here, it's if you were to quit trading when you got your goal for the day. So far you would have only worked 69 minutes so far this month, this year. You worked 69 minutes and you would have averaged, you would work 69 minutes for $4,012. So an hour and 15 minutes for $4,000. So it's okay. It's going to pick up once we get to multiple contracts. The hourly rate is going to go up more and more. It wouldn't be $4,000. It would have been 69 minutes. 69 minutes. I'm sorry. The 69 minutes would have been for $1,000, $1,027 for the 69 minutes. You're making $1,000 an hour so far this year. And that'll pick up as we get into more contracts through the year. For right now, though, we'll just go over the trades that we did and didn't do. On gold, we just had a couple of trades, a few, looks like. Hang on, scroll all the way back here. Okay, so gold set up right here, right at the very beginning. I didn't take that one, I missed it. That would have been great. That would have gotten us the goal for the day. It looks like there was probably one right up in, yeah, there was one right up in here too that I didn't get right there. One right here. Some really nice trades here with gold. There's another one here, another one right here, another one right here. This one we did finally get, and we got 10 ticks profit on that one. So the gold was really giving it up this morning. I don't know why I didn't notice that so much, why I was circling them as they were coming along. But anyway, we get into here. There was another one right here that I didn't do. Now I highlighted this area right here because I'll come back to this. This is about drawing trend lines. I'll come back to this if Dwayne's still on the phone when I'm done, because I have a feeling he might be. And I don't want to rush him. So right here, we had another trade here, an up close on or above the trend line. We picked up 12 ticks on that one, I believe, right? That put us at 22. And then we started training. Now in here, it really didn't give us any good trades all through here until we were done. Over here where we finished up right here at about 11:15, 11 o'clock. Still hadn't really given you any good context. You could have taken a blue off a blue here. The context was still up from before. It never changed it down. So you could have taken this blue off a blue right here for a little bit of profit. It would have been a break even had I taken it. And then we get right here into the end of the session. There was really nothing in here. There was one long trade right here, I guess you could have done. That would have stopped you out, but that was it. There was nothing right here that you could do. Now remember to come back to that stuff on the trend line. Stuff over there in a few minutes if I have to. Okay, so the crude oil today. Now we started out right here. There was a blue off a blue. Now this was barely in context. I didn't do it. It was right at the beginning, right at the open. The first one that I did on crude, this is today, right? Yeah, it is, was right here. And this one, I'm not even sure that that was right because the ribbon looks pretty crunched up right there. But I think when it was happening, the ribbon was spread out a little bit, and this kind of crunched it up when it pulled back right here. I'll have to go back and look, but it's possible that I made a mistake on that one, and I stopped out minus 10 ticks. And then right here, I know I had my stop trail to plus 5 ticks, but I thought I had a target on it like 14 ticks, and it went down, but I wasn't looking at the chart when it went down, and then it canceled out all my orders, and then when I went back to look, I couldn't figure out what I had. So I just wrote down plus 5 on that one. And so that puts us at minus 5 on crude right there. I didn't get the follow-up trade, and I didn't hit this trade here. This would have been a stop out. This would have been profitable. And the slingshot got all messed up down here, so we couldn't do anything. We got right in here into the training. I really didn't have any good idea what it was going to do after this, right here, because it really wasn't giving us anything with the slingshot. It did move along up here to 11 o'clock is when we started up again, and we didn't get a trade there. We didn't get any trades all through here. And we're going into the break right here. Context was up all through here. The context was still up. It just didn't give us any trade setups. Nobody even, nope, didn't give us any trade setups. Over there, context was trying to change it down, and it finally did right in here. So it looks like there was one trade here that would have been a break-even trade during the break. It was like that. Been right here, a break-even trade during the break, and nothing since then. So the markets have been really complicated today. They've been really hard to trade. Oh, not hard to trade. I mean, they just haven't given up a lot of trades. The gold so far was the best one. On the ES, we did get some decent trades here on the ES. Let me scroll that all the way back, and all the way back to here. Okay, this is where it started out. Now we got the gold for the day with the gold on that very first trade with the gold. But right after we got that one, there was a trade here on the ES that I missed, another one here that I missed, and then one right here that we picked up 12 ticks on. Okay, we picked up 12 ticks there, and then here we picked up it's like 9 ticks to get us to 21. We missed a trade there, we missed a trade there. Here we picked up 4 more ticks to get us from 21. No, we went from 21 to 33. So we had somewhere there was another 12 ticks, I think. Yeah, this was another 12 ticks here, I think, something like that. Went from 21 to 33, and then 33 to 37. So there was 4 ticks there, and then we stopped out, and that put us back down to plus 27. So I think that was a 12 tick gain. That was a 4 tick gain. That was a 10 tick stop out. Then, so we're at 27 at that point. In here, there was a trade here that we missed. It's too bad we missed out. That was a really nice trade. I kept waiting for it to pull back and give us something, but just wouldn't do it. And then we get all the way up here, and this was during the break. Not the break, but during the training. I stopped right here, and I said, if it gets down below this level, we're not going to want to trade until it breaks down below this level right here is what I was saying. Okay, so any trades that set up on the short side inside this area right in here, you want to skip until you get down below that level, which we finally did over here. Okay, we got down below that level there, but it didn't give any short trades. It went right back in this range in here. And what I was pointing out during the training was these levels here were shown on the DOM. These levels here were looking left. The price was probably going to get up to those levels. All right, so I figured we're going to go down a little bit and then go up to these levels. So we were on this bar when I said that. So we went up to those levels first, then we went down, and then we went back up to those levels, and then we went down, and we kind of just chopped around in this whole area here, which is what I thought we were going to do. And even after it broke down through the bottom right here, it's still chopped around in that whole area, going all the way up to this level right here, just hanging in that area. Now, as it moved forward here, as we moved forward through time, the context change, or the beginning point of the trend changed. Okay, as you get higher highs and higher lows, and those higher highs, the most recent higher highs and higher lows, become more significant than the higher highs and higher lows before that. So right in here, instead of this being the place where the context would have changed, this would be the place where the context would have changed. Okay, so right here, after you get that, you start looking for shorting opportunities, and well, there was everything turned the wrong color in here, and then it changed directions and went back the other way. Now right in here is where we started trading again, right through here. I don't know why I missed this trade right here. This was a decent trade. I should have gotten that one. And this right here was a decent trade. Okay, so I should have drawn a trend line like that and taken that trade right there, right here. All right, and drawn a trend line like this. It ended up being like that. And that was a down close, that was an up close, that was a down close. And taking a short trade right here. Okay, that's what I should have done, but I missed both of those nice trades at the end. I don't know what I was doing that I missed those nice trades. Then I got all sideways right at the end of the session here. There was nothing we could do. I was drawing in trend lines, looking for an opportunity to do something as we wrapped up the morning session, but it just didn't give us anything. Okay, now during the break, I was thinking, is Michael R in here? He is in here. Okay, I'll show you that in a second, Michael. I was thinking when the European markets closed here during the break, the volume was going to pick up because the volume did drop off in that last half hour there. And so drew a little line in here. If you go to the 5 minute, do a little line on the 5 minute with the volume indicator. I don't know if it's going to show up anymore because when I drew it, no, it's not showing up anymore. It was down here at the bottom of this candle right here, or the top of this candle. So the volume did not pick up. It just dropped off right here at 11 o'clock. The volume dropped off and it's still been going down ever since. So we're having rising prices with declining volume. All right, that means fewer players in the market right now are going to make it move more dramatically. Okay, dramatically drama in the market. Anyway, during the break here, there were some trades in here on this move up. There were some trades that you could have taken, right? But I didn't. But let me go back here and we'll do this. Well, let me go through the last part, and then I'll go back here, and then whenever Dwayne comes on, he can come on. But I'm sure he's probably on the phone right now. Let me find that other thing. Hang on. Here it was, the spreadsheet. Okay, so again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 12th day of January 2023. We lost 5 ticks. We lost 5 ticks in crude and made 22 ticks in gold and 27 ticks on the ES. Put us at 507.50 in the morning session. Today took 1 minute and 1 trade to get to the goal for the day. We're up $100 a contract, and we took a total of 8 trades. So on the month now, we're at $4,012. That's over 8 trading days, averaging $501 per contract per 2-hour trading day. We've gotten our goal 8 out of 8 days so far this year. Okay, 8 out of 8 so far this year. If anybody's in here for the first time, let me just go back and check and see if anybody's in here for the first time today. It looks like somebody might be, but anyway, I'll just go over this anyway. We ended last year with $238,558 in the room. That was over 246 business days, averaging $969 per contract per 2-hour business day. Now, last year I traded the whole 2 hours in the room. All right, every now and then I take like a half hour and do a moment in time. Well, about 3 times a week I take a half hour and do a moment in time. But this year I'm switching to training for half of the time in the morning session. So I'm only trading half the time. That's why the numbers are about half of what they were last year right now. But what I'm thinking of doing is once I reach $2,000 a contract, I'll add another contract until I get the goal in the morning. I'll do that throughout the year. That's my thought. Okay. Excuse me. There, that's better. So yeah. So that's where we stand on the spreadsheet. Now I'll do this part here about taking the free trial and all that in a few minutes. What I want to do right now is go back to that spot. I believe it was on gold. Now this whole area I had highlighted right here because of the way it came together with the trend lines. Now, the reason I went into a lot of detail in the room this morning was because Shailesh asked about this trade right here. And, that was a trend line trade. It wasn't a bounce off the BBC. Even though we had the bearish separation right here and the cycle was red and below the green line, we had all that bearish separation. That was all good. We needed to close on or below that trend line, which we got. But he asked about a trend line. I thought he was talking about this mess down here. And if you look at this down here, let me just remove all these things that are just sitting here. Okay, so I'm going to go over, well, I can go over it tonight too in the partners meeting probably. So I'll leave that big blob right there. So right in here, the way this came together is we got this moved down. Now we needed a pullback to get the green line away from the cycle. It started this pullback right here. And I was a little concerned that the green line was so close, and on a down close, it was going to push it right back into the cycle. So I kind of wanted a longer pullback or a bigger pullback, but I started drawing the trend line anyway. Now the first trend line was like that, okay? You see there's a wick sticking out of the bottom right there. So that means you have to start the trend line over. You have a double bottom right there, or actually that was a little lower, but you have a wick, so you got to start over on the next wick. Okay, so you move it over, and that's our trend line. Then there's another wick, so you got to move it over, and that's our trend line. Now that trend line went to the down close of this bar. Then there's another wick, okay? So you got to move it over one more time, and this becomes our trend line. Then there's another wick. So you got to move it over one more time, and this becomes our trend line. Then, finally, one more wick. So you move it over again, and this is the final trend line that we draw here before the trade disqualifies itself by changing colors. Okay, that was just a little trend line. It was just how you have to manage a trend line as price keeps chomping around and going sideways. I mean, it'd be the same thing on the top. If you had the same kind of situation on the top, you just have to draw it the other way, like right up in here. This would have been the original trend line. Then there's a wick, so you have to start over. And then that would have been the trend line. Then there's a wick, so you have to start over. And that would have been the trend line. And then this is the trend line you ended up with. And in this particular case, you actually ended up with a trade because you had the close on or above the trend line right there, that white bar. Okay, so I'll highlight this area too for the partners meeting tonight. I'll go over this stuff again. All right, does anybody have any questions? I got the question box out. Does anybody have any questions? If you have questions, now is the time to ask them. Okay, if you don't have any questions, I don't know if I have a meeting. I think I have a meeting coming up here in 10 minutes. Let me check my email to see if you did respond. Yes, I do have a meeting coming up here in 10 minutes. So I'll say this part right now, okay? If you have not taken a free trial with us and you want to, go here to mytradingiq.com and click right here. You can click there. They're all going to bring you to the same place. They're going to bring you to this page. If you click there, it's going to bring you to this page. If you click down here, it's going to bring you to that page. And there's one more place you can click down at the bottom. They're all going to bring you to the same page. All right, you sign up for the free trial. And I don't know if you noticed on that, it's only got 1 day left in this set. It's only got 1 day left. So if you sign up for the free trial now or tonight, depending what time you do it tonight, next week's stuff will be in here. And so you'll have next week in there. Next week's information will be in here. Okay, that'll change tonight at some point. That's for the free trial people. If you're signing up today, you get tomorrow and you get the stuff for next week. Okay, so if you're signing up for the free trial and you only see 1 day in there, that's okay. If you sign up for the free trial tonight and you don't see tomorrow in there, we'll send you an email telling you how to get into tomorrow. It's just this information here telling you how to get into tomorrow. But this is like Thursday is a transition day with the trial information. Okay. So the spreadsheet, we went through that. Oh, I know what I haven't gone through today with you. Yeah, we'll go back here for a sec. And we'll go into here. I'll just disconnect from this for right now. Here we go. All right. So right in here, well, let's just look at one market at a time. Okay, let me see if I can do that. I spread this all the way over here like that. Let's see if I can do one market at a time. So in here, all we're looking for in here is is the black line to be in the right color, black line to be in the green or to be in the red, and you have a bounce off the ribbon. All right, you could hit the ribbon just a little bit, you can hit the ribbon a lot. You just want to have a bounce off the ribbon. It doesn't matter if the ribbon is crunched up or not. I mean, you don't want it to be flat like that. You want to have some sort of slope to it. But Now, it doesn't matter if it's crunched up. If you can see all 4 lines, you can see 2 lines. You know, what you want to have is the black line be in the right color, and then you look for a bounce in that direction. Like right here, bounce down. Right here, it's in the green, bounce up, bounce up. And that was in the last half hour. Right in here, it was in the green, you bounce up. Right in here, it's in the red, bounce down, red, bounce down, bounce down, red, bounce down. In here was the green, that bounce up didn't seem to work too well right there. In here was flat. So again, that's what I'm saying. You want to have some sort of movement to it. But in here, you had the green, bounce up, in the green, bounce up. And over here, you wanted to wait till the black was in the green. Right in here, bounce up. Right in here, it started to flatten out. Still take the bounce up. It would have been a break-even trade. Then you wouldn't have done anything. Right in here, it got back into the green. So you could have taken it again there. And again, taken it here. This one probably would have stopped you out, though. I should have started at the beginning instead of starting at the end. Why don't I do that? Go back here to the beginning. Okay, and this is just the ES. I don't know when Dwayne's going to come back on, so I'll just do the ES right now. And I do have a meeting in 7 minutes, so actually let me send them.
I'm ready. I've just been waiting for you to finish.
Oh, okay. I only had a phone call, and I figured it was probably important, so I was just going to cover a whole bunch of stuff until you came back.
It was important, but luckily it didn't take very long.
Okay, good. Well, let me just finish this then I'm ready to hand it back to you. Okay, so in here, you see how the black line is in the red. So all you're looking for is any bounce off the BBC. All right. Down here in the slingshot, you want to use the green line to manage the trade. Now, this is not the same green line that's in the normal slingshot. This is the ultimate slingshot. You want to use the green line to manage the trade. You're going to find over time that the green line you can use, not the green line, but the slingshot you can use for entry criteria as well. If the black is in the red and the white's coming out of overbought, that's usually going to work out pretty well for you. That's for times when it doesn't actually hit the BBC. Okay. And that's the kind of thing that I was working on. I said I didn't want to do that. Didn't want to do that demo tomorrow yet because I want to make sure I got that stuff down, all those kind of rules and stuff. Right. But anyway, so in here, starting from the beginning, the black's in the red. You want to take any bounce off the BBC when the black is in the red. There, right there. I know it got out of the red just a little bit right there, but you could have still taken that. This is a 6-tick range, so any bar down, any full bar down is enough to get your stop to break even. This one right here would have stopped you out, I think. I don't think you got 4 ticks in that one. So out of all those trades so far, this is one that would have stopped you out. Now, remember, you only got to get 1 or 2 of these. You don't have to get all of them. But you just see it keeps happening again and again and again and again. And then it changes direction and starts going the other way again and again and again and again and again. And then changes direction. This one would have stopped you out. And this one would have been okay. Right in here, it starts to crunch up. You might have wanted to think twice about that. It would have been okay anyway. Still want to think twice about that probably. In here would have been maybe a break even. You might have gotten a little profit out of that or a stop out. It depends what you did with your stop right there, how you manage your risk. Right here was another one off the BBC. Right here was another one that would turn out to be break even. Then right here and right here. You guys see, it's just the same thing again and again and again. It's just, you don't have to draw trend lines. Anytime you bounce off the BBC, if the black is on the bottom and it's in the right color, then you can go long. If the black is on the top and it's in the right color, then you can go short. Okay, it just simplifies the process completely. All right, and that's it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am indeed.
Okay.
Recap of the recap.
Today it took 1 minute and 1 trade to get to $100 contract.
Good job.
Thank you. Thank you.
Now, for those of you that are just learning how to trade, the first time you reach your goal for the day on the first trade, in the first couple of minutes since the market opened. Now, futures trade around the clock, but let's say you you don't start trading for whatever reason until 9:30 when Wall Street opens. Whenever you sit down to trade, it could be morning, afternoon, evening, and you put on one trade, you get your goal for the day, and you're going to feel empty. You've worked hard all your life, you've got a great work ethic, and you're going to feel a little lost. Okay, I knew what to do, when to do it, and then I did it. Now what do? Put the mouse away, go do life, enjoy the freedom that trading gives you, the opportunity to spend time with your family, opportunity and freedom to travel, and time to spend on whatever reason and purpose God created you for. He created each and every one of us. We're all parts of the same body, with Jesus as the head. But every part of the body is important. Without a big toe, you couldn't stand up. You couldn't keep your balance. So, whatever role God has called you to, go willingly, go joyfully, and always work not as if you're working unto man, but as you're working unto God Himself. So important. Now, when you nail that first trade, the temptation to keep trading will be great. This is where self-discipline comes in. If you don't have it, if it doesn't come naturally, in one-on-one mentoring sessions, I'll work with you and help you to develop it. Okay? All right. Michael just covered what happened the first 2 hours of the day since the Wall Street open. But the day actually started last night at 6 p.m. Eastern. That's when the Globex markets open. The week starts Sunday night at 6 p.m. Eastern and remains open around the clock until Friday afternoon at 5 p.m. Eastern. Stock traders are on the clock from 9:30 a.m. to 4 p.m. Eastern. But futures traders, it's a whole nother ballgame. Whether you take your 2 points out of the S&P for the day at 9:40 a.m. or 10:40 p.m. doesn't matter. And whether you're in Arizona or New York City or Paris or London or Kampala, Uganda, doesn't matter. As long as you have a strong, reliable internet connection, you now have the freedom to work anywhere on planet Earth that has a fast, reliable internet connection. So it's not just about the money. It's about the freedom to pursue things in life that really matter. Money is a renewable resource. Time is not. Only God knows how many days each one of us is allotted on this earth, in this thing we call life. So I can't encourage you enough. Don't spend all. Now, there is an initial learning curve, okay? If you're brand new to trading, you got to learn what a candlestick is and how to read a chart and how to understand what it's telling you. But beyond that, don't waste what precious time you have on planet Earth staring at charts all day. Get the job done, put the mouse away, go do life. Since the markets open Sunday night at 6 p.m. Eastern, we've issued a total of 78 alerts. 12 never triggered. Still waiting on 12. Now this was at 7 a.m. this morning. As I explained to you last week, there are now 3 recaps a day. We used to recap ongoing throughout the trading day, but now it's morning, 7 a.m. Eastern, late afternoon, and then usually about 9-10 p.m. Eastern is the final recap of the day. So 3 recaps every trading day. Now, this morning at 7 a.m., we're in week 232 of Logic 247, and we have issued over 13,200 individual handcrafted alerts. Now, they're not just the E-minis, S&P, Dow, Russell, NQ, but the alerts also include crude, gold, silver, euro, and the bonds. Since this recap at 7 a.m., there have been more alerts issued. Ones that were waiting have triggered. And so when Valerie posts the late afternoon recap, these numbers will change, I think, pretty drastically. But at 7 a.m., we'd had 54 actionable alerts, of which 10 or 19% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that I teach all of our passport holders. You can stay with the mechanical model and risk a fixed number of ticks on each trade, or you can embrace market structure and let the chart tell you where your stop needs to be. On any alert, whether it's logic or concierge or even trades that you find on your own, which is our goal for you. Our goal is for you to become self-dependent. We want to get you to the place where you never have to ask anybody, where should I get in, and when should I get out. The chart is the purest form of information that you can possibly get. And the 30-minute roadmap chart, which you'll see in a few minutes when we go to the charts, shows you exactly where the windows of opportunity are. All you have to do is exercise patience and discipline for price to get to the area that's ripe with opportunity, and then use your smaller time frames, 7-tick range, or even some of our traders use a 5-minute chart to execute and limit the amount of risk required on the trade. Now, that doesn't mean you risk $300 on every alert. No. That's the maximum you risk. Even if you find a trade yourself that looks good, if you have to risk more than $300 based on market structure, you should pass and go look for a better, high probability, low risk opportunity that doesn't require you to risk more than $300 per contract per trade. Over the last 232 weeks, we've averaged 20% or less of the alerts getting stopped out. As of 7 a.m. this morning, we were sitting at 19%. Now, for anybody that's new in the audience, has no idea what an alert looks like, I'll show you real quick, just so you understand. See, we're not just teaching you how to trade, but we're giving you trades around the clock. From the moment the markets open, Sunday night at 6 p.m. Eastern, till they close Friday afternoon at 5 p.m. Eastern. Now, I know some people just trade the alerts and don't worry about having to learn how to trade. I can't prevent that, but I caution you to rethink doing that, Because right now you have an opportunity to actually learn how to trade. I know the numbers seem almost magical sometimes, but there's no magic. It's simply logic. And the more logical it becomes, it just becomes common sense. Because price flows the same across every market and every time frame. Once you truly understand that, once it's written on the tablet of your heart, you don't have to wait for the S&P to set up and give you a quote-unquote perfect setup, because there's no such thing as a perfect setup. If the S&P doesn't have an opportunity, just look at the Dow, the Russell, crude, gold, silver, euro, bonds. We treat every market exactly the same. And if you like trading stocks, Google, Apple, Walmart, Dell. The whole purpose of us getting our indicators onto TradingView. Now, we've said over the years that you could use our strategy and indicators to trade any market in any time frame. Now you actually can see that it's the truth with the TradingView platform. When you put our indicators on an individual stock or an individual crypto or a forex pair, none of the rules change. You don't have to tweak any of the indicators. You don't have to change the settings on anything. Why? Because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's been in place since the inception of the markets, and it will remain in place until the markets cease to exist. So once you understand that, all of a sudden, the clouds part, and you realize trading's not easy, but it can be simple. Just be aware that companies are going to always try to complicate it. Why? So they can sell you more solutions to solve problems that really don't even exist. Our strategy and our indicators are built upon the underlying principles of which markets operate. All you need to know is how to reach your goal for the day. Some people get so intimidated by all the information out there, all the indicators, all the oscillators, all the algorithms. Noise clutters your mind. All you need to know is how to get your goal for the day, and then simply do it day after day after day. And as your account size grows, the 2420 blueprint will let you know when it's time to add an additional contract. You only add one at a time. You only add with profit you earned in the market. 2 points in the S&P with one contract's $100. But as you earn your way up the ladder, one contract at a time, once you reach 5 contracts, the same 2 points is worth $500. And once you work your way up the ladder to 10 contracts, the same 2 points is now worth $1,000 a day. And if you decide to just level off there, the 2420 blueprint's designed to take you from 1 to 20 contracts over a period of 24 months. But if you get comfortable making $1,000 a day and you really don't want to take on additional risk, you should never feel pressured. Okay? 10 contracts and 2 points a day in the S&P, or 10 ticks in crude, or 10 ticks in gold, whatever makes you $100 per contract traded. Okay? Puts you in the top 3% of wage earners worldwide. Last week, here's how we finished the week last week. 98 total alerts issued on a holiday week. 15 never triggered. We had 83 actionable alerts, of which 8 or 10% would have been stopped out based on that maximum risk profile that I just explained. Now, each alert, we had 2 gap fills that did not completely fill right away, so that means the red X means they got stopped out. Okay. Gap fills are one of the most reliable trades you'll find, but hey, sometimes they get stopped out. When you see the Z's, that means never triggered. Now, we only have, that's my time. I'm on Mountain Standard Time. Market's open at 6, so it would have been 7:15 p.m. Eastern. Telegram reads the clock on your computer and displays time appropriately. So if you're looking at this exact same channel and you're on the East Coast, it's going to say 7:17. If you're on the West Coast, it's going to say 4:17. Okay. So then we had a long on crude. B means buy. S means sell. T is your initial target. The initial target is designed to help you get your goal for the day, so you can just put the mouse away. If you choose not to put your mouse away, then looking at the chart, you'll see where the second target is, the third target, the fourth target, the fifth target, and the final trade to target. From 74.60 to 76.60, that's $1,000 per contract traded. Price ultimately rallied to 76.50. So from 74.60 to 75.60, $1,000. To 76.50, $1,900 per contract traded. Long on gold, long on silver, long on the euro, long on bonds, long on the Dow, stop out on the ES, long on the Russell. Now on the NQ, the initial target pays $200 per contract traded. It's the only one that varies. And the reason is because of the volatility of the NQ. You don't ever want to risk more than the potential profit in the trade. Real important. There's all kinds of systems out there that have you risking 10 points to make 2. That's ridiculous. It's nonsense. It's bad math. It's bad science. And you will quickly go broke. Okay. Here's a short on the Dow. 33,710 was the entry. The initial target was 33,690. Goal for the day. But price continued dropping to the second target, to the third target, and at the time the recap was done, price had dropped to 33,630. So from 710 to 630, that's $400 per contract traded. Or you could just get your goal for the day. ES short. Now, every short The final trade to target will be the weekly trading zone below. On every long, it will be the weekly trading zone above. Short on the Russell, short on the NQ, short on the NQ, and short on silver. When silver moves $1, that's worth $5,000 per contract traded. We didn't have $1 move here, but when we go to the charts, I'll show you what it looks like. So that all happened Sunday night. Stock traders are waiting for the market to open Monday morning at 9:30 a.m. Eastern. But our traders had tons of opportunity. And you might say, well, I don't know anything about trading bonds. Neither do I, but I created this alert. And it went further than I anticipated. Well, I'm sorry, it came 4 ticks shy of where I anticipated. And let me say it again, I don't trade bonds. We don't teach you how to trade a particular market. We teach you how to trade. Once you understand how to trade, you can trade any market, any stock, any crypto, any forex pair. So all of this Sunday night. Then we rolled into Monday. So if you're on the trial, you have access to every alert that's ever been issued. This morning I issued alert number 13,271. If you're a member, you have access in the alert channel to every alert we've ever issued. In fact, there's another channel with the beta test results before we launched Logic 247. And while you're on the trial, you have access to the trial channel where you can also see all 13,271 alerts. Along with the logic alerts, which come out around the clock and are created as a training tool. I beg you, don't make the mistake of just trading the alerts and pocketing the money and going, woohoo, I'm a trader, go print out some business cards. Use them for the purpose that they were created, to help you learn how to spot windows of opportunity in the market. Every logic alert, which is based on current price action, I build in time for you to get the alert, study your 30-minute chart, understand why it's an alert. You'll begin to see the windows of opportunity yourself pretty quick if you follow that process. Study the alert when it comes out, then go study the 30-minute chart and go, and then wait patiently for price to reach the area, and using your 7-tick range or your 5-minute chart, execute, minimize your risk, get your goal for the day, put the mouse away. Our original alert service, which goes back much further than Logic 247, CTAs. This is forward guidance for the entire session. Now, the static report was posted last night at 6:40 p.m. Eastern. Every one of our members and everyone on the trial got these numbers last night at 6:40 p.m. Eastern. You'll notice there's 2 numbers for each market. We cover all the same markets in the concierge as we do in the logic alerts. However, these don't come out around the clock. They're posted as a static report, and they're based on historic price action. When current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. There's two numbers for each market. You should think of this number as a target first, an entry second. Same thing with this number. Target first, entry second. As soon as this report comes out each night, you should go to your 30-minute chart of the markets you trade and make a note on your 30-minute chart where price was at this point in time. Because moving forward, if price gets above the BBC and starts trending up towards 39.98, that's bullish. So our strategy will naturally look for opportunities to be long the market. On the other hand, if price gets below the 30-minute BBC and starts trending down towards 39.65, that's bearish, and so our strategy will look for opportunities to be short the market. In either case, that's where you'll use Logic 247 and everything you learn in the live training room every trading day to yourself find opportunities to be long or short the market. It is far better to get your goal for the day on the way to the CTA number. Once price trades above or below a CTA number, above the top number or below the lower number, it will most likely trigger multiple times. And you'll see that when we go to the charts. If you're not currently a member or on trial, then you did not have access to these numbers last night at 6:40 p.m. Eastern. So I invite you to take a screenshot because we're going to walk through each and every one of these markets in just a minute. But first, I've got 10 things you need to know today, January the 12th, 2023. Our first headline, courtesy of NBC News. Aides to President Biden have found more classified papers in a location separate from the private Washington office where his personal lawyers found the first set of 10 documents with classified markings. Now, NBC News reported yesterday, citing a person familiar with the matter. Let's always wonder who those people are. Yeah. Biden aides have been searching, according to this person familiar with the matter, who chooses to remain unknown for whatever reason, at least at this point. According to this person, Biden aides have been searching for more classified material ever since the first batch was discovered in November at an office Biden used after his vice presidency, according to NBC. Further details about the second discovery were not immediately available, including the number and location of the papers and how sensitive the documents were. Attorney General Merrick Garland has asked a U.S. attorney appointed by former President Donald Trump to review the discoveries. Now, the Department of Justice is under a lot of scrutiny right now. So we can just pray for America that they do try to do the right thing. What is the right thing? The right thing is the thing that serves the American people and the American taxpayer. Number 2, Wall Street Journal. Airlines were forced to delay more than 9,000 flights into, out of, or within the United States on Wednesday due to a temporary outage on a critical Federal Aviation Administration pilot alert system. More than 1,300 flights were canceled. The White House said there was no evidence the problem was caused by a cyber attack. The glitch prevented planes from taking off, stranding passengers for hours. Airlines said they hoped to return to normal operations on Thursday, but 511 U.S. flights had been delayed and 63 canceled as of early this morning, according to a flight tracking site called FlightAware. That's one word, flightaware.com. Industry officials compared the disruption to the shutdown of air traffic after the September 11th, 2001 terror attacks. Number 3, CBS News. Russia's defense ministry announced Wednesday that it was replacing its military commander in Ukraine, putting Army Chief Valery Gerasimov in charge and making former Commander General Sergei Sorokovin his deputy. The ministry said the shakeup would help address the need to organize closer interaction between branches of Russia's armed forces and improve command and control. Britain's military intelligence said in an update that the shakeup marked a significant development in President Putin's approach to managing the war. Sorokovin was appointed in October as Russian forces suffered setbacks, which have continued. The update said Russian military bloggers would likely be unhappy about the change as they increasingly blame Gerasimov for the poor execution of the war. Number 4, NBC. Nassau County, New York. GOP officials on Wednesday called for newly sworn-in Representative George Santos to resign over false claims about his qualifications and personal history he made during his campaign. The Nassau County Republican Party Chairman Joseph Caro said at a press conference, "He's disgraced the House of Representatives, and we do not consider him one of our congresspeople." Santos said he would not step down, sticking to the defiance he showed after others urged him to quit. 2 New York Democrats this week asked the House Ethics Committee to investigate whether Santos violated campaign finance laws. House Speaker Kevin McCarthy said Santos should not sit on any key committees. Number 5, LA Times. The 7th atmospheric river storm to hit California since Christmas drenched Northern California with more torrential rains on Wednesday, adding to damage already caused by flooding, mudslides, and downed trees and power lines. The storm-related death toll rose to at least 19 after Sonoma County Sheriff's officials announced a person had been found dead in a submerged car. A 5-year-old boy swept away by floodwaters Monday was still missing in San Luis Obispo. Jack Taylor, a meteorologist with the National Weather Service's Weather Prediction Center, said another storm this weekend is expected to hit the state with another atmospheric river. Essentially rivers in the sky that can carry 15 times the volume of the mighty Mississippi River. Now, California's been in a drought for a long time. Is this climate change, or is this how the earth takes care of itself? Now, it might not seem right, and it might seem unfair, and who am I to judge? I'm certainly no meteorologist. But I believe when God created the heavens and the earth, I think You know, his thoughts are not our thoughts, his ways are not our ways. But I think he created an earth that's capable of healing itself. And even with people, sometimes to save a man's life, you have to take off his leg or an arm. But it saves the person. And while disabled, disability, whatever the proper political term is these days for someone like that, they go on to lead a full, healthy life. Our hearts are saddened, of course, of the people who've been lost. We pray for this missing 5-year-old boy who is missing. All the friends and family of the people who've been lost, and those who are in harm's way. I mean, there's another big one coming this weekend. You know, for years people have joked about how California was going to fall into the ocean and one day Arizona would be beachfront property. It's always been said kind of jokingly, really based upon the earthquakes that happen so frequently around the LA area. But all we can do is pray. God is in control. Number 6 from the Chicago Tribune. Illinois Governor J.B. Pritzker on Wednesday signed a state law prohibiting the sale, manufacturing, or delivery of assault rifles, making his state the 9th to ban the military-style weapons. For a long time now, I and many other leaders in the Illinois General Assembly have prioritized getting the most dangerous weapons off our state's streets. The push to remove assault weapons intensified last year after a gunman killed 7 people with one of the guns at a 4th of July parade in a Chicago suburb. Jeff Regner, owner of Key Firearms and Training in New Lenox, Illinois, said most of the weapons he has in stock are now illegal. It's devastating, he said. So what's he going to do? Are the police going to come in and seize them? Is he going to pack them up, transport them across state lines, sell them there? I don't know. But imagine if that were your business. And remember, guns don't kill people. People kill people. Number 7 from the Associated Press. First Lady Joe Biden had 2 cancerous lesions, one above her right eye and another on her chest, removed on Wednesday at the Walter Reed National Military Medical Center in Bethesda, Maryland. In a report released yesterday, President Biden's physician, Dr. Kevin O'Connor, said the lesions were confirmed to be basal cell carcinoma. Biden, 71, also had a 3rd lesion above her left eyelid, which was removed and sent for standard microscopic examination. The lesion above Biden's right eye was found during a recent skin cancer screening. Joe Biden, who is expected to return to the White House last night, is experiencing some facial swelling and bruising, but he is in good spirits and feeling okay. Our thoughts, hearts, and prayers are with the First Lady, that God would heal her 100%. Number 8, from Reuters. The Islamic State claimed responsibility for a suicide bombing that killed at least 5 people outside the Afghan Foreign Ministry on Wednesday. The Islamist militant group's Amaq news agency said in an affiliated Telegram channel that the blast killed and wounded dozens of people, including diplomats, in the heavily fortified area. Workers at a nearby hospital put the number of wounded at 40. The Islamic State has become a major security threat to the Taliban, which returned to power in Afghanistan after U.S. and allied forces withdrew in August of 2021. The attack was the first this year, but Islamic State militants have targeted foreigners at the Russian and Pakistani embassies and other sites, including a hotel used by Chinese business executives. I don't know what to say other than to every brave American and our allies who put their life on the line on a daily basis over a period of 20 years. I'm so sorry. And to the American taxpayer, all of the equipment, new equipment, high-tech equipment that your tax dollars paid for was just abandoned, handed over to the enemy that our brave men and women gave their lives for. Nothing in history has ever happened like this. Number 9, Buffalo Bills. Damar Hamlin was released from a Buffalo, New York hospital on Wednesday, 9 days after his heart stopped during an NFL game against the Cincinnati Bengals. Medical workers revived him on the field, and he underwent several days of intensive care before being transferred to Buffalo General Medical Center, where he received more care, evaluations, cardiac, neurological, and vascular testing on Tuesday. We have completed a series of tests and evaluations, and in consultation with the team physicians, we are confident that Damar can be safely discharged to continue his rehabilitation at home and with the Bills. So it looks like he's going back to playing football. Our prayers are with him. Number 10, the sad one, from the LA Times. Guitar legend Jeff Beck, a 2-time inductee into the Rock and Roll Hall of Fame. I didn't even know you could be inducted twice. Has passed at age 78. His representative said he died Tuesday after suddenly contracting bacterial meningitis. Beck pushed the boundaries of blues, jazz, and rock and roll, influencing generations of shredders, according to the LA Times. He made his name as a member of the Yardbirds before launching a varied solo career and was recognized in the Rock Hall of Fame for both. Aerosmith's lead guitarist Joe Perry told the New York Times, "Jeff Beck is the best guitar player on the planet." And he also added that Beck was the kind of talent that appears only once every generation or two. Our thoughts, hearts, and prayers are with the family and friends of guitar legend Jeff Beck. You may have passed, but your music will live forever. And that's what you need to know today, January 12th, 2023. Let's do the charts. All right. We got above the daily BBC on January 6th. Then we had a bearish day. This was a big green candle, but it closed red by the end of the session. Then we had an update January 10th, closing right at the 38% reverse fib, where we had suggested it would. And then yesterday, the market closed at the 24% reverse fib, where we had suggested it might. And the high of the day, okay, has taken out this bearish cross area. Okay, we got initial rejection at the area. This is really important, okay, because this is as true on a 30-minute chart as it is on the daily chart. The larger the time frame, the more important the information. But as you can see, where the bearish cross happened, we got rejection, okay? Price is struggling to get through. The low of the session is down at the daily step line. Just below that's the 38% reverse fib. From where we are now, the first level of support below us would be the 24% fib extension. If we continue higher, if we take out the high of the day, then keep your eye on the high of December 15th at 40.43, and then keep your eye on the 50% reverse fib at 40.70. Beyond that, we got the high put in on December 13th, and then the 62% reverse fib. Now remember, the high of this down, we've been in a downtrend almost a year now. The high of the downtrend put in on March 29th led to a low on October 13th. Now from March 29th to October 13th, we had many attempts to break out of the downtrend, all of which failed spectacularly. Since the low was put in October 13th, we've also had another spectacular failure. But remember, the indices will always go higher over time. That's how they're designed. The S&P, as an example, is 500 large cap companies. But the board at Standard & Poor's has a whole list of qualifications that a company must meet before they can be considered for membership in the S&P 500. Anytime one of the companies in the S&P 500 gets weak, they miss their numbers, they're no longer profitable, they will be removed from the S&P 500, and they will be replaced with a strong, bullish company. It's almost like a game of musical chairs. Only the best of breed makes it into the S&P 500. And while you might have been a best of breed last year, if you're not a best of breed this year, you're going to be shown the door, and whoever is best of breed will be brought in to replace you. So by constantly shuffling the deck, it's a guarantee that even after being in a downtrend for almost a year, the indices will always go higher over time. The same is true of the Dow, which is 30 blue chip stocks, the NASDAQ 100, and even the Russell 2000, which is 2,000 small cap companies. I know I talked about this a week or two ago. I'll mention it again for anybody that's new. If you have a long time horizon to retirement, or a son, or a grandson, or daughter, buy them some shares in an S&P index fund. If you like the spider, go with the spider. There's a lot of choices. But if they start putting money in that fund, somewhere between the age of 21 and 25, and if they can commit, or you can commit on their behalf, $50 a week, they'll be able to retire early. Think about it. I mean, you can do your own math. When you were 21, if you had started buying an S&P index fund and put in $50 a week through good times and bad. You see, when you're investing for the long term, down days, down weeks, down months, down quarters, down years, don't matter because you're dollar cost averaging. So when price drops like this, it's actually a blessing because this week your $50 or whatever the number is will buy more shares in something that is ultimately going to go much higher over time. Where was the S&P 500 when the dot-com bust happened? 1,500. 2008, when we had the financial meltdown over the mortgage-backed securities. Where was the S&P? About 1,500. And now, after a year being, almost a year being in a downtrend, where are we? More than double that. $39.99. So that type of investing works for a young person. If you're a little older, you're close to retirement, or you're already retired, then you will most likely need to take a more active hand in your portfolio. See, there's a world of difference between being a trader and being an investor. Warren Buffett is an investor. He's not a trader. If you put him in front of a platform and handed him a mouse, he probably doesn't know how to even enter and exit a trade. He doesn't buy individual stocks. He buys whole companies. But you get my point, okay? Now, can you be both an investor and a trader? Absolutely. But the investment side really has to do with how much time you have to let your money work for you instead of you working for your money. Hang on for me 1 second. Okay, sorry about that. So we got a doji going on the day. We're well off the low of the session. We're well off the high of the session. Where we close today will be super important. Okay. Yesterday, we went from the 38% reverse fib and closed just above the 24% fib extension. Today, we've traded above that area where the bearish cross took place, but the day's not over. We could make a run for the 50% reverse fib. Just as easily, we could drop back to the 38% reverse fib. Or we could get stranded here at the 24% fib extension, as we did all through here and all through here. The green line's called the BBC, stands for bull bear cross. When price crosses above it, we're bullish, anticipating higher prices. When price crosses below it, we're bearish, we anticipate lower prices. The other indicator, the red and blue one, it's called a CFMA1. I refer to it as blue and climbing, red and falling. I want price to be above the BBC with blue and climbing present in order to take any long trades. The reverse is true if I want to short the market. Price needs to be below the BBC and red and falling. And when that black line, the step line, crosses over from the left side to the right side of red and falling, then price is most likely going to pull back to the BBC, just like it did here. This is a textbook example. Okay? And right here, as price started to move higher, we were above the BBC, we had blue and climbing, the step line crossed over, and what did we do? We pulled back to the BBC. Now, institutions look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Size matters. It's institutional money that moves price in any market. Their accounts are denominated in hundreds of millions and billions of dollars. The typical retail trader's account is denominated in thousands or tens of thousands of dollars. So retail traders basically provide liquidity for the institutions. So no matter what market you trade, whether it's the S&P or silver or gold or Walmart or Bitcoin or the British pound, spend 2 minutes before you start trading looking at the daily chart so that you know what the institutions are up to. We know the institutions are trying to drive price higher, okay? But they're meeting resistance along the way. But at least we know which way that wind's blowing, okay? We're not taking our trades off of the daily chart, but just spend 2 minutes. I tell you, if you'll spend 2 minutes with the daily chart of the market you trade and identify where major resistance is and where major support is before you start trading, your results will improve. $40.21.5. High of the day, that's resistance. Low of the day, $39.54. That's support. And below the low of today is the 38% reverse fib at 38.43. And above the high of the day, you've got this high and this high. Jot those numbers down. Sorry guys, I'm going to have to put you on hold one more time. Jot those numbers down every day before you go to your roadmap chart. Okay? This is going to tell you where there's windows of opportunity. This is going to make sure you're on the right side of the street when you take a trade. Now, everything I said about the daily chart and the indicators, it's true across every market and every time frame. When the S&P is above the BBC and we've got blue and climbing, I'm only going to take long trades. In the Logic 247 channel, over 13,200 individual alerts. Every one of them is a trend trade based on the 30-minute chart, price, and the BBC. Is this a good situation to be trading in? Hang on, guys. Okay. Could you go long? Yeah. In fact, there might even be a logic alert out there, 4,007 up to the highest weekly trading zone. Or we may have already satisfied that one. So we had the CPI month over month economic report this morning. It was a miss. I forget what analysts had expected, but we didn't quite make it. And so the markets said, oh, that's a big problem. And then they said, well, maybe it's not such a big problem. And then maybe it is a problem. So, you know, it's hopefully, I mean, it's clear as a bell here. You're above the BBC. You've got blue and climbing. If you choose not to go long, that's okay. But why in the world would you consider going short? Now, this vertical line on the chart separates today from yesterday. This is Thursday, which started last night, Wednesday night at 6 p.m. Eastern. This is Tuesday, this is Monday, so forth. When price drops to a weekly trading zone, when price rises to a weekly zone, we expect resistance. Once it gets above a zone and drops to a zone, we expect support. And then when it rallies up to the next zone, we expect resistance. 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 Then we finally broke through. And then we broke down. So we had two-sided action on the CTAs. By two-sided action, what do I mean? Well, you could have got your goal for the day on the way to the CTA long, and you could have got your goal for the day on the way to the CTA short. Once price got to the CTA number, it traded through it on the first move. You see this candle closed here. It opened here and ran all the way up here. So from 39.98 to 40.19, that's 21 points at $50 a point. That's over $1,000 per contract traded over the course of an hour. $1,000 per contract traded is what the market made available. You've earned the right to trade 5 contracts, then that's $5,000 it made available. And then price gets back below the number and does it again. And again. Once price trades through a CTA number, there's a greater probability of it triggering multiple times than not triggering multiple times. One, 2, 3, 4, 5, 6, 7. We're on our 7th long trigger at the CTA. Now the CTA is at 39.98. The zone is at 39.93/39.94. So if you had chosen to enter at 39.95, then you'd had your goal over the day before you got to the CTA. And same thing down here. You had all this room on the way down right here. Okay. Now, price dropped from here to here. And it was red, only to finish green. Make sure you're aware when there are high-impact economic reports coming out. Stefan almost always posts them in the Breeze channel. That's our own social media channel in Telegram. If you're a member, you have access to it. Don't trade blind. You don't want to put on a trade not knowing there's an economic report coming out in 2 minutes. Okay. I use investing.com. Michael uses forex.com. Daniel's Trading has its own built-in. You have to go here. Economic calendar. Okay. There's a ton of free options. So that you always know. And again, we talk about it the day before. Stefan posts about it in the Breeze channel or in the members only channel. So don't let them catch you by surprise. From 39.65 we dropped to the zone below. The zone's 51.52. The low was 54. Zones are an area just like fibs. And then we go all the way back up, trigger on the long side, and then come all the way back down and trigger on the short side again. From 65 we dropped to 58. And 7 points, $50 a point, $350 per contract traded. But I'd much rather get it on the way. How you do it, it's entirely up to you. Forward guidance for the entire session. The weekly zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. We've published the zones since December 14th of 2009. And in over 13 years, what's changed? Nothing. The price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Over and over, again and again. Now, I mentioned lines in the sand earlier, which is more than just a popular song from the 70s. Circles in the sand? I don't know. But I said you draw a line at 39.98, draw a line at 39.65 on your 30-minute chart. It serves as a visual cue to keep you on track of what the market is doing, why it's doing it, and how to successfully trade that move on your smaller time frame, 7-tick range or 6-tick or 8-tick range or 5-minute, whatever you choose. Michael teaches you on the 7-tick range chart in the morning. You can just use that. But let the 30-minute be your roadmap, okay? I mean, the 7-tick range might give you a short trade right here. But why not trade with the trend? I mean, there's nothing illegal about counter trend trading. Just doesn't have the same high probability, low risk as a trend trade. That's why every alert in the Logic 247 channel, 13,200 plus, everyone is a trend trade as defined by the 30-minute chart, price, and the BBC. Try to make it as simple as possible. Here's the Dow. Here's where the market opened last night. Price attempted a run up and then it pulled back to the BBC and the pullback held. You'll notice the pullback holds more often than it doesn't. Like here, 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 here. And sometimes we'll spike it and it'll still end up holding. You see, none of these candles left touching the BBC. So yes, it spiked it, but ultimately it held. And it held, and it held, and it held, and it held. Is this a one-day anomaly? No. It's just how markets work. Whether you're pulling up from below or pulling down from above, the pullback holds more often than it doesn't. Now, the zones, once you become a lifetime member with no recurring fees, you not only have access to the live training room every day for life, but you have access to unlimited one-on-one mentoring for life, and you have access to the weekly trading zones for life. Once you understand how price behaves around the weekly zones, they will become one of the most important tools in your trading toolbox. So price makes a nice move up to the CTA number, giving you an opportunity to get your goal for the day. And then it trades through up to 34,194, like 30 points, $5 a point. S&P pays 50 a point, Dow pays 5 a point. There's a 10-to-1 ratio there. Now, this candle closed here, opened here, so this is the same move, okay? While you could have gotten your goal on the way to the number or on the first candle that traded through the number, it continued all the way up to 34,333. Alexa, 333 minus 165.
333 minus 165 is 168.
Alexa, 168 times 5.
168 times 5 is 840.
Okay, so that's an $840 per contract move. Per contract. Trading 2 contracts, double that number. Trading 5 contracts, trading 10. You get the idea. So we come down, trigger on the short side, and then we go back up and we trigger on the long side, and then we finally make it to the trade 2 target, which is 34,395 on this trigger here. Alexa, 355 minus 165.
355 minus 165 is 190.
Alexa, 190 times 5.
190 times 5 is 950.
Okay, so 950 bucks, and we overshot the zone by a little bit. Okay. Only 3 things happen at a weekly zone. The most common is consolidation, 70% of the time, rejection, 20% of the time, 10% of the time, the slice. Some price slices through a zone like it's not even there. Like this candle did. When that happens, it will typically retrace to the zone it sliced through and continue in the direction of the slice. This is a very exaggerated move, but it shows the point. All right, Russell. Here's where the market opened last night. We pulled back to the BBC. The pullback held, and then off we go. This candle opened at 1857.40. So let's just call it 58. There's your 2 points for the day on the way. But it traded through and ran all the way up to 1868. 8 points, $50 a point, $400 per contract traded. Right there in 1 hour. Okay, then what happens? Price gets back below, rallies again, gets back below, rallies again. This last rally has took us from 1860 to 1886. That's 26 points. Hey Alexa, 26 times 50.
26 times 50 is 1,300.
This is a $1,300 per contract move. You only need 2 points. You can make as much money as you want to make in the markets by learning to take $100 per contract consistently out of the market every day. Doesn't matter if you do it with a stock, with the S&P E-mini, crude, gold, silver, Bitcoin, British pound, doesn't matter. $100 per contract per day. Your account size, when it grows to $2,000, the blueprint will give you the green light to add a second contract with profit you earned in the market. The blueprint will then tell you when it's time to add number 3, number 4, number 5, number 10. It goes all the way to number 20. It's called the 24/20 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. But as I said earlier, if once you get to 10 contracts, you're making $1,000 a day, just taking 2 points out of the market, or 10 ticks out of crude, or 10 ticks out of gold. You know, if you're comfortable being in the top 3% of wage earners worldwide, you should feel no pressure to increase your trade size. If you want to, then go right ahead. And you don't have to stop at 20. It's just a 2-year plan to get you from 1 to 20 contracts over 24 months. Only adding 1 contract at a time, and only adding with profit you earn in the market. Now, before you trade live, when you first sign up, the blueprint's going to ask you to put together 10 consecutive days in a row in your demo account where you reach your goal in 10 trades or less. You should not even think about going live until you complete those 10 days in the demo account where you reach your goal in 10 trades or less. Now, during that period of time, however long it takes for you to put together 10 consecutive days, that's when you should be working on your business plan and your trading plan. Those are 2 very important documents that every trader needs, but guess what? 9 out of 10 new traders don't even know they need a business plan or a trading plan. They bought some gimmicky set of indicators and red light, green light, they're going to click the mouse, blah, blah. Well, you know how that ends. How many years have you spent doing that? How much treasure have you spent doing that? Money's a renewable resource, but time is not. So maybe it would be better to just learn how to trade. That's what we offer. Yeah, but that sounds like work. Well, the more you treat it like a business, the more it will behave like a business. If you treat it like gambling, you'll get gambling results. Guaranteed. On the NQ. Here's where we opened last night. We pulled back to the BBC. The pullback held. And our first move up, this candle right here, would have got you your goal for the day plus. And then it continued higher up to 550. 11,550. So that's 46. Hey Alexa, 46 times 20.
46 times 20 is 920.
Okay, so that move right there is worth $920. And then we get back below the number, trigger on the south side, trigger on the north side, trigger on the south side, trigger on the north side. And this last move's about to hand over. Oh, what's this high? 571. NQ pays $20 a point. Crude oil pays $10 a tick. So the S&P pays $12.50 a tick. So you need 8 ticks in the S&P or 10 ticks in crude, or 10 ticks in gold, or 20 points in the Dow, because the Dow only pays $5 a point. You only need 5 points in the NQ, because it pays $20 a point. But it's very volatile, so that's why on the logic alerts, the initial target on every market's $100, except the NQ, it's $200. So price pulls back to the BBC, the pullback holds, we start climbing, okay. Now crude at $10 a tick. This candle opened at 77.63. Just call it 77.70. $400 up to the target. Once we trade through the target, $180 per contract traded. Then we dip back below the number, and we make another run up to 78.60. It's $500 per contract traded. Back below, up we go. Back below, up we go. 79, we'll call it 79.10. From 78.10 to 79.10 is $1,000 per contract traded. Market gave you a couple of opportunities to make $1,000 per contract traded simply by trading the published number, and we haven't even reached the final trade to target. But once price trades through the CTA, there's a greater probability of it triggering multiple times than not triggering multiple times. Gold. Here's where we opened last night, consolidated at the zone. 1886, and we ran up to 1888. $200 per contract traded. Back below, up we go. $140 per contract traded. And then we run up to 1888, $200. And then we get back below, and off we go. And we run all the way to the trade to target. From 86 to 97, that's $1,100 per contract traded. And then here, price got back below and gave you another $1,100 per contract traded. Now it went further. Could you have stayed with it? Yeah. What happens when price slices through a zone like it's not even there? It typically retraces to the zone it sliced through and then continues in the direction of the slice. Quite predictable. The low here, 1872.40. Just call it 73. That's actually $260 per contract traded. Of course, there was all this red, which would have given you your goal multiple times on the way down. Silver. Here's where the market opened, got above the BBC, made a run to the zone where we expect resistance, pull back to the BBC where we expect support. This time we get through the zone and touch the CTA. Now, the zone is 2379/80. So, could you have gotten 2 pennies, $100? Yes. Then we get back below, and off we go. This time up to 2388. That's $250 per contract traded. Then we get back below. Off we go again. This time it takes us all the way to the trade 2 target at 24.21. So that's roughly 40 points, roughly $2,000 per contract traded. In fact, it's over $2,000 per contract traded because we sliced through that zone. It's real interesting how certain economic reports that sometimes don't seem to carry much weight today kind of turn the market on its head. But it's not just the economic report. It's the dynamics happening with the bellwether, okay? We've been in a downtrend since March 29th. Will this be the time that buyers are so committed that they can actually take us? We have to trade 46.10 in order to break out of the downtrend. We're currently at 4,014. So 46.09 and a quarter. That's a ways. So don't expect to see it this week. But if we can overcome the 62% reverse fib, which we've not been able to do during the downtrend, what did we say earlier? Over time, the indices always go higher. And the down years just give you the opportunity to accumulate more at a lower price, knowing it's going to go higher over time because that's how it's built. You know, a race car is going to go fast because that's how it's built. It might not be the best analogy, but it'll work. Euro, what do we got? We consolidated at the zone for hours. Then we made a run up. Goal for the day. Back below. Did it again. Back below. Did it again. I don't trade the euro or bonds, for that matter. Speaking of the bonds, let's see what we can see. This chart does double duty. You can only have 10 charts open at a time in DT Pro. The long CTA was 130.14. The short was 128.10. So here's 130.14 to 130.24, goal for the day. Or maybe you decided to just get your goal and put the mouse away. Here, here, or here. And then 128.10 took you right down to 128. Goal for the day. Trading's not easy, but it can be simple if you let it. The question is can you? Can you be content getting your goal for the day and putting the mouse away? I can't answer that question for you. That's why we invest our time, money, resources, and energy in you for 5 consecutive trading days before you spend a dime, so that you're able to make a well-informed and intelligent decision whether or not you have what it takes to become a trader. And if you believe that you do, then you have an opportunity to invest in yourself by becoming a lifetime member. A lifetime member means exactly that. There's no fine print. There's no recurring fees, no upsells, no new shiny objects to buy, no nonsense. It's your all-access pass to everything we do, everything we've ever done, and anything we do in the future. Everything a trader needs, all under one roof, one low price. And you'll be surrounded by other traders who share a common faith and have common goals. You don't hear our members in the discussion group talking about their Ferrari or their Lambo. No. They have loftier goals than that. Bert's just reminding me we got a holiday coming up, Martin Luther King Day. Most likely the markets will open Sunday night, and so there will be logic alerts and concierge trade alerts. But the weekly trading zones, whenever there's a Monday holiday, the trading alerts, or the weekly trading zones, don't come out until Tuesday morning. Thank you for sharing that, Bert. He just posted it in all the discussion groups and the Breeze channel, so anybody that wants to have a look at it can. Okay. So, the passport. 9 out of 10 new traders fail simply because they don't have a teacher. We fix that by putting you in front of a teacher 2 hours every trading day. An interactive environment where you're encouraged to ask as many questions as you can possibly think of. It's a simple methodology. It's a simple strategy. It's rules-based. It won't take you very long to learn the rules. Along with those 2 hours, you have access to unlimited one-on-one private mentoring sessions. Strategy that you learn and the indicators that you own for life work exactly the same on individual stocks, on crypto, on Forex, as they do on futures. You don't change a single rule. You don't change a single setting. You can just flow wherever the opportunity is because you now know how to trade. Don't pigeonhole yourself. I mean, if you're brand new, yeah, you should just focus on 1 or 2 markets till you get your sea legs, right? But after that, you don't have to pigeonhole yourself. Remember, you're learning how to trade. You're not learning how to trade the S&P or how to... Now, there's going to be people that'll tell you, well, you can't trade the S&P and gold the same because they've got different personalities. I'm sure they do. One looks good in red and the other doesn't. I don't know. I'm not looking for a relationship. I'm looking for a high probability, low risk trade opportunity. I don't care what market it's in. $100 per day per contract is $100 per day per contract. Whether it came from Amazon or Bitcoin or the British pound or the S&P E-mini. And that same $100 with 10 contracts is $1,000 a day. So, no upsells, no recurring fees, no nonsense. Pay once, you never have to pay for any trading stuff again, ever. Unless you've got that whole shopaholic thing going on, where you've been doing it so long, replying to every one of these clever emails, buy this, Holy Grail, change your trading forever. We've discovered the secret. We're only willing to share it with 98 people. Oh, 97. Oh, 96. The clock's ticking at the bottom of the page. Boy, you better buy it quick before they won't sell it to anybody else. Man. I promise you, we will never, ever insult your intelligence in such a base way. Because with us, lifetime memberships, lifetime. You also get the Logic 247 alerts, the concierge trade alerts, and you get to come to the workshop, the members only workshop on Thursday night. Plus, you have around the clock support via Telegram. All right, good word for the day. Mediate and percolate. Colossians 3:16. Let the word of Christ dwell in you richly. Meditating in Scripture is one of the great keys to spiritual growth. In the first Psalm, David writes, in his law he meditates day and night. That's Psalm 1 verse 2. But the word meditation is not one that a text and Twitter generation relates to very well. We imagine sober-faced monks wearing hair shirts and chanting on bended knees as the sun rises every morning. As a result, we want to run in the opposite direction. We admire such people, think God has to call us to such a thing, and conclude that he certainly hasn't called me to do that. Or we think meditation is a discipline that requires hours of uninterrupted time and becoming one with the candle, and time is the one thing we don't have in surplus. We have a finite amount of time on this earth, and only God knows how many days, how many hours. And the result, we live busy but spiritually barren lives. Some of us think meditation is fine, but we believe there are other spiritual growth and character development areas we need to work on first. So, what's the problem? We don't understand what it means to meditate or the rich benefits it will give us. A spoon of instant coffee is okay if you just want the basic taste of coffee. But if you want more, if you want to enjoy the flavors of the coffee in all their richness, you have to let it percolate. Some of you might even be old enough to remember when a coffee pot was called a percolator. Some of you might even have one to this day in your home, but you probably don't use it. It's up on a shelf. So we could paraphrase the scripture this way. In his law, he percolates day and night. That is what Paul meant here. Let the word of Christ dwell in you richly in all wisdom. So friends, today, enjoy the aroma, taste the flavor, and experience the strength. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. 888-858-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.